Like if the market's doing really good, you're probably going to do a little better than the market. But where you really do well is when the market drops and you buy more. That's when you make those big returns. And you only need a few stockpiling events through your entire life and you can achieve financial independence. They're so powerful. You just have to have some capital ready to deploy during those downturns in the market.
Hello, everyone, and welcome to the podcast. Here at Viking Capital, we are big advocates for diversification, not just across different investment types, but also within the same type. Take multifamily investments, for instance. We just don't stick to one market or geography. We spread our interests to embrace various deals and opportunities. Today, however, we're veering off the beaten path of our traditional real estate focus, and I'm thrilled to introduce Sean Tepper of Tykr, an IT consultant who has impressively mastered the art of stock market investing. We're also taking a deep dive into the use of AI in stock selection, discussing everything from mutual funds and financial advisors to the volatile world of penny stocks and IPOs. So buckle up for an insightful ride. Welcome to the show, Sean.
Thanks for the invite, Robbie. Appreciate it.
Absolutely. Happy to have you. So let's get started. Maybe you could just start with telling us about your journey. And as I'm looking at your background here, I see some pretty cool guitars and I see a very nice Darth Vader cup. So yeah, tell us a little bit about you and your journey.
Guitars, music, I've never gotten paid to play, but I've been playing guitars for 20 years. Behind me, if you guys, any musicians out there appreciate this, is Les Paul, and we got a PRS over here, which Santana, he's one of the popular guys that really used a red PRS. With Darth Vader, yeah, I've got a series of mugs around my office here. I just happen to have this one out. I'm a movie buff, 80s movies all day, but Star Wars, I mean, big fan.
Yeah. Awesome. So tell us about your journey, how you came to where you are today.
Absolutely. I'll take 2 minutes here, kind of shorten the journey. We got a lot to talk about, but I've got about 20 years of business experience, primarily in tech. I built an agency in the 2000s. This was like between 2006 and 2010. Went through a merger just after the recession. And it wasn't like a check was written for $1 million and, hey, here you go. You get a ride off into the sunset. It was none of that. It was pretty much all debts and liabilities wiped clean, which is great. And I got a fresh start. At that point, I knew instead of trading my time for a paycheck, I'm like, how do I get money to work for me? And started investing kind of as an angel investor. At the same time, I got into IT consulting. I did a lot of work with large companies like GE and Kohler. I planned to do that for 2 years. That turned into 12 years. Sometimes things take a little longer than expected, but I'll get to the one I'm working on today. So I started investing in parallel to consulting and making like okay returns for like 5 years as an angel investor, which essentially means investing in private companies, not public companies or stocks. And I said, I could be swinging for the fences for the next 30 years. This is stupid. So let's do this the smart way, the Warren Buffett way. So I turned to him, I turned to Charlie Munger and another guy by the name of Phil Town and started researching how are they investing? Because I knew these guys, they're able to beat the market consistently, but I know they're not gambling men. They're not using feelings or emotions, which means there's some sort of logic there. So kind of applying my IT consulting / software engineering background, let's reverse engineer this. So I created an Excel sheet with the help of those guys. I never talked to them, but just researching what they do, started putting together an algorithm in Excel. And I wanted to gamify the experience a bit. So I knew like, hey, what's a good stock and what's a stock I should avoid? Because there's a lot of noise out there, especially on Twitter and Reddit and YouTube, talking about stocks. You have no idea what to do. So this Excel sheet was quite rigorous, and I used it for about 4 years, and my returns ranged between 15 and 50% per year. For comparison purposes, the S&P 500 market is about 8% after inflation. And I'm like, okay, so I'm beating the market. That's great. And then I get to about 2019, and I'm like, you know what? Maybe I have something here as a software opportunity. And I start sharing this Excel sheet with a few retail investors as well as some institutions. And everybody was like, when are you going to turn this into software so we can use it? And I was like, all right, I've got a new business idea. It took about a year to build the first version. Tykr is live today. And in now being just over 3 years old, we have a little over 8,000 customers in about 50 countries. And we're really proud of this last detail. We have a Trustpilot score of 4.9 out of 5. We place a high emphasis on customer service. But long story short, what Tykr does is helps people manage their own investments with confidence, all based on value investing. So really going back to Warren Buffett, Charlie Munger, their strategy is always value investing, finding strong businesses, sometimes boring businesses, but those are the businesses that consistently can beat the market.
That's very interesting. So tell us about these algorithms that you created. How does it work? And I know there's like this 4M distinction that you also followed.
Absolutely. I'll get to the 4M in a second. So with Tykr, there's no black box or secret sauce here. We're actually open source. What that means is you can go to tykr.com. There's a little education tab, and if you scroll down, you can get to calculations. We tell people all the time, you can go create your own version of Tykr. However, we still hope you stay with us. That's kind of our thing. And it's funny, some people play around in Excel, but they still stay as subscribers. But anyway, the calculations really look at the fundamentals, which are in any business, you have 3 financial statements. You have your income statement, cash flow statement, and balance sheet. And with this, we look at the revenues, the profits, which is your net income and EPS. We look at free cash flow. We look at debt and a few other lines, but we look at those over 5 years. And if we can't get 5 years of data, for example, like an IPO stock that just went public, we look at a minimum of 3 quarters. And that really rolls up to a scoring system that's pretty easy to understand. Between 0 and 100, higher the score, the safer the investment. And now with the 4M, this is where things get a little fun, is we tell investors that you don't want to just start and stop with the math part of investing. That's all rolled up into that score. You also want to look at the business model and how it compares to other companies in the same industry, and then, of course, the CEO. So the 4Ms go as follows. You have the margin of safety, which is the first M that encompasses all the math. That really is taken care of by Tykr. Then you have the meaning, which is the business model, how many revenue streams, how scalable those streams are. What scalable means is, can you increase revenues without increasing your liabilities or payroll? Your third M would be Moat. That's how the business compares to other companies in the same sector or industry. And then the last M is the management. That's like the track record of the CEO. So to give you context here, our previous 4M tool within Tykr it's more manual. So you have to take what can take 5, 10, sometimes 15 minutes to kind of go through, but it's pretty much a checklist. The new 4M, which is launching this month, December of 23, will be powered by ChatGPT, which pretty much does everything for you. And our customers are jumping out of their seats waiting for this. When is this going live? So I'm super excited to have that do all the homework on the business. How does it make money? How does it stack up against the competitors? And what's the track record of the CEO? And it does that all for you.
Well, that's amazing. I have a couple questions.
Sure.
You put your algorithm out there, which is extremely generous of you guys to do. And you mentioned that people stick with you. What kind of incentives or what do you offer on top of just the algorithm in Tykr?
Yeah, so Tykr's a B2C SaaS, and what that means is we're low touch, and customers join 14-day free trial, no credit card. You get in and you can see stocks, ETFs, which are a bundle of stocks. You can see crypto. We don't analyze crypto because crypto's not a business, but we do bring in the crypto tribe, if you will, as a marketing play to kind of, hey, join us, but you probably want to use value investing as a tried and true way to build wealth. We've got other fun features in it, like a watch list feature. I love this feature because you can add stocks to it, and if anything changes, you automatically get notified. Like if that score changes, like if it's going south, you can sell before you lose money. So that's a big tool. We got a portfolio tracker in it, and then we've got alerts soon. Of course, I mentioned the ChatGPT powered 4M. We also have the mobile app, iOS and Android, coming out early 24. And then we'll have some other cool features like broker connections. Whatever broker you use, it'll connect to Tykr automatically. And if you make changes in your broker, if you buy, sell stocks, those are reflected automatically within Tykr. So that's kind of the tool set of what's within the platform.
Got it. Okay. So there's, I mean, it makes sense to to still subscribe to the platform because you get this other information that you can use as opposed to doing it on your own. Before I get into AI, the 4Ms that you mentioned, how did you come up with that? Where did you come up with that?
Yeah, so that's really started by Warren Buffett. He always taught us that you want to invest in businesses you know. For example, I know tech really well, so I tend to gravitate towards tech businesses, but I do not know pharma. Now, I know you've got a background in healthcare, so you might know more than me, but I'm like, I'm going to probably avoid something I don't know a lot about, so I stick to what I know. So the 4Ms were a little further refined, I'd say, by a guy by the name of Phil Town, and he really came up with that concept of the margin of safety, the meaning, the moat, and the management. And a few books here, I'll give them to you right now. You got Rule 1 Investing, you've got Payback Time, and his third book is Invested. He wrote that with his daughter, and he talks about those 4Ms, and they're really good framework to teach us as investors. You just and I see this with analysts on Wall Street, they only look at the math, and that's a mistake. You have to understand the business. Is it a scalable business? How does it stack up against other companies? And what's the track record of the CEO? That's such a big deal. And if you can check all 4 boxes, all 4Ms, you can find some really impressive investments.
So how has Tykr performed during the recent ups and downs of the stock market?
So within the last year, Tykr teaches you how to buy when the market's down. So you're going to embrace downturns, which is what you want. There's a technique, this is coined by Phil Town as well, it's stockpiling. What you want to do is buy when the market's down. A great example of this is 2020 when COVID hit. It was actually February, March. It was like a 30% drop in the market. Well, I stockpiled heavily in the market. I think went up, I don't know if it was like 20, 30% that year. Well, my portfolio was up 120%. Now, I'm not going to get 120% every year because there's not going to be a downturn every year. Now, in 2022, I bought more when I was down. Well, I'm up 100% now, which is great. But again, you're usually, like if the market's doing really good, you're probably going to do a little better than the market. But where you really do well is when the market drops and you buy more. That's when you make those big returns. And you only need a few stockpiling events through your entire life and you can achieve financial independence. They're so powerful. You just have to have some capital ready to deploy during those downturns in the market.
Yes. And, the amount of capital obviously varies from person to person, right? But like someone, let's say most of our listeners are very well-to-do, they're high net worth individuals. How much do those people typically put into the market during these ups and downs?
I'll kind of break down a strategy here for you. So we tell people, doesn't matter who you are, try to invest between 15 and 30% of your monthly income in the markets. But when you send that money over to your broker, like I use TD Ameritrade here in the States. I don't know if you got customers outside the States, but the popular players are like Fidelity, E-Trade, TD Ameritrade. But anyway, 50% of the cash that goes over to your broker every month, keep it in cash. The other invest, you went to DCA, which is dollar cost average, and just keep investing every month. The money that's sitting in cash, you wait for those times when the market pulls back, and that's when you deploy. So if you've got tens of thousands of dollars, or let's say $100,000 sitting on the sidelines ready to deploy, let's say the market starts dropping 10 to 20%, I recommend, and this is what we teach in our tools, try to buy every 5 to 10% down. It's called buying into the dip. You can't, and there's no algorithm or human being that can time the very bottom. That's impossible. But you want to buy into the dip. So when that starts taking off, that's when you make some really, really big returns.
So when you see, you said a 5 or 10% dip?
Yep.
And you're selecting certain stocks based on the algorithm that you've created, correct? So say you have 5 stocks and you're looking at those, and when you see a 5 to 10% drop, then you start buying. And how much do you buy? How much do you buy? Like of that, say you have, a certain cash pile on hand. How much?
Well, use a nice round number of $100,000. I won't spend it all. Like, let's say, because you don't know how long a downturn is going to last. An example would be, let's say if you got 100 grand and it starts going down over the next 2 weeks and you deploy all that 100 grand. Well, let's say over the next 2 weeks to 4 weeks after that, it goes down further. Yeah. Oh, you're missing, right? You're missing an opportunity. So you want to kind of pepper it in over a duration, and just be prepared. You always have some left. You probably don't want to get down to less than 10 to 20%. Like in this case, $100,000, you get down to $10,000 to $20,000. It's like, that's getting a little low. So always keep some available just in case it goes down further.
Maybe 20% of the cash you have, you have a dip, you just put it in those various stocks. Okay.
Yeah.
So my brother did an interesting experiment. He used ChatGPT and asked certain, based on certain criteria, and I don't know exactly what those criteria were, but he asked ChatGPT, which stocks should I pick, that meet these criteria? Maybe it's similar to the 4M criteria that you mentioned. Mm-hmm. And he got a list, and he put money into that. And earnings were coming out the next day, and he said, prior to earnings, what should I buy? Earnings came out, stocks went up a significant amount. He sold, he made 5, 10, 15% just in a few days, which was amazing. And he tried it twice and it worked. So it just goes to show the power of AI. But can you talk about that? Like how is AI changing how we do business?
Yeah. So with AI, I got to touch on one thing there. It sounds like he's making short-term gains, which is actually pretty hard to do even for AI. To take a step back, we're all about investing, not trading. And we could get it right. Traders, there's statistics out there, 99.9% of traders will lose money, whereas investors, it's the buy and hold or buy and buy more. You don't want to be entering and exiting. But to answer your question there with ChatGPT, yeah, it's really impressive on how you can collect more information to make smart choices in a business. Now, what's probably happening with ChatGPT, it's probably skimming through financial statements to look at profitability. It's probably factoring in the news, what happened recently, if there's good news or bad news. Probably the business model as well, like we do. For example, businesses, this is not financial advice, but I invest in Microsoft and Alphabet because there's so many revenue streams within one company. So if something's pulled out, that table is still standing. It's still a reliable company. So ChatGPT is probably looking at all these elements and saying, hey, XYZ stock is probably a good pick and moving forward from there. So, but in this case, instead of 10 years ago, analyzing data sets just took so long. Today, it's like rapid fire. It's really impressive.
Yeah. I mean, is this going to change, as people are using this technology, and you are too, is this going to change the complete dynamic of the ebb and flow of the stock market? Because, you'd think most people are going to select certain stocks because they just fit that criteria, and then those stocks may get a tremendous boost, and people will sell at the same time, and it'll just magnify the ups and downs. I mean, how do you see this playing out?
I don't see it happening in that fashion. The reason is human emotions always trump whatever algorithm or tool. There's a quote from Warren Buffett: there's some innate or perverse human characteristic that likes to make easy things difficult. One of my favorite quotes from Warren. And the truth is that people, if they've got the right tool, the right algorithm, they will still find a way to let emotions take over and sell at the wrong time for a loss or buy the wrong stock. So I think the people who are patient, there's another quote from Warren Buffett, the money is a machine that transfers money from the impatient to the patient. The people who are patient at the end of the day are going to do very well, and they will do even better if they use the tools, but they'll most likely be the minority. They will not be the majority because humans let emotions take over.
Okay. Well, that does make sense because I do that. Absolutely. I buy high, sell low. I mean, I've done that for years. That's why I don't even invest in the stock market really anymore. Sure. I get my financial advisor to invest for me, sure. But they're doing okay. They're not doing great. And what I'm hearing from you is just something to do in addition to their services. Yeah. And maybe we could pivot there. Everyone thinks about getting a financial advisor. Some do, some don't. What do you recommend as far as getting a financial advisor?
Yeah. So I've had several financial advisors and wealth managers on my podcast, and their job is not to build your wealth. Their job is to protect it. So and I'll give you kind of some criteria here to determine, yes, you should work with one. Let's say you're nearing retirement. Let's say you're nearing financial independence. Maybe you sold a business. Maybe you sold some real estate, or maybe you inherited some capital from a loved one. In that case, definitely go to financial advisor, wealth manager, and let's protect that capital. But what they're going to do, and this is something that you and I can do, they're going to put you in ETFs and index funds, sometimes mutual funds. And those are just bundles of stocks. And when they do that, you're not going to beat the market. You're lucky to break even and match the market. And that's fine because you're in wealth protection mode. But if you're still working, you still have like a timeline to retire. Let's say it's 5, 10, 20 years out. You want to be going into individual businesses. You can keep some money with your advisor, but we do have a lot of people in our community that they're in this position of realizing that I'm getting like 8, 9, maybe 10% a year. I'm just moving too slow. Let's keep some capital with my advisor, but let's go into some other businesses and get that 15 to 50% returns. And especially when the market goes down, stockpile, because that's when you really accelerate your wealth building process.
Yeah, well, that makes a lot of sense. So, you mentioned when to buy, and you mentioned dollar cost averaging and stockpiling. How do you know when to sell?
Yeah, all right, here we go. So the 4M tool I mentioned earlier will help with that. So let's say you've got an on-sale business, and I actually use 3 criteria to sell by using Tykr. So number 1, that stock changes from on sale. Stocks are either on sale, watch, or overpriced. And if a stock changes from on sale to watch or overpriced, that's criteria number 1. Criteria number 2 would be your 4M score. That's also a point scale from 0 to 100. Anything that's like 80 to 100 is a really strong company. Keep buying more. Anything between like 60 and 79 is like moderate. And then anything 59 or lower is like, you got to get rid of it. So criteria 2 would be 4M, it's 59 or lower. And then criteria 3, this is big, is to follow rule 1 investing, which goes as follows. Rule 1, don't lose money. Rule 2, don't forget rule 1. That means is you only sell for profit. I can share case studies in my own history, but I refuse. I actually made the decision. I refuse to lose money in the stock market. I only sell for profit, which means you have to be patient sometimes and let the market drive some weaker businesses up.
Okay. And Tykr helps with this process as well.
Yeah.
So, say I'm a new investor. You never really bought and sold my own stocks. I'm listening to this podcast. I'm very interested in starting my own. Subscribe to Tykr. Have some cash on hand. Just to take us through the process. What happens?
We tell people your first objective is not to build wealth or get rich or you become a billionaire with the stock market. Like, yes, you can do that, but the first objective is confidence. It is like literally doing tons of research and testing with our audience. The one word that everybody arrives on is they want confidence to do this on their own. So your objective is start small with like between $100 and $1,000. If you never bought stocks before, it's like jumping into the deep end of a swimming pool when you're little. I remember that moment when I was a little kid, like I'm scared to death. I don't want to do it. And I did it. Well, you start small between $100 and $1,000. You buy your first stock or 2 or 3 or whatever, and then get in the habit of buying stocks every month and just kind of ramp up from there until the point when you can invest between 15 and about 30% of your income in the stock market. That's what we recommend. If you can't get there, that's fine, but start small because literally it's just confidence. That's all you want in the beginning.
Okay. And do you have to check these stocks on a daily basis? What's the time commitment?
No, fortunately, I love the feature in the tool called the watch list. It's the set it and forget it feature. So every stock in your portfolio, just add it to the watch list. So if something changes, like that summary I mentioned, if it changes from like on sale to watch, you get notified. If the score changes, you get notified. If the margin of safety. So you'd literally be enjoying whatever hobby you want. You're going to get a notification on your phone letting you know, hey, something just happened. Your stock is going south. You probably want to sell before you get into the negative.
Okay. Interesting. What about dividend yield stocks? What are your thoughts on those?
All right. So this is a good framework too for your audience to think about. There are 4 types of stocks in the market. You have value stocks, growth stocks, speculative stocks, and dividend stocks. Now, Tykr is all about value stocks, finding those financially strong businesses that are on sale. Growth stocks and speculative stocks are very similar. They're usually overpriced. They're red. They're looking bad, except growth stocks can actually pass 3 of the 4 M's. That meaning Moat and management can be good. However, the financials could be complete garbage. So determining between the difference, you need to use the 4M tool. Dividend stocks, on the other hand, kind of sit in their own little category. They're not really good for building your wealth because dividends, it's just too slow. If you buy value stocks, your returns aren't going to outpace dividend stocks night and day. It's not even close. But dividend stocks are good for kind of that moment, like you're going into index funds or ETFs. You want to be in this mode where you just want to pay yourself a dividend every quarter. Just buy some of these boring dividend stocks. That way you don't have to sell shares of stocks to like travel or enjoy hobbies or whatever. So I do recommend people, as they're nearing retirement or financial independence, try to move towards dividend stocks so you can just pay yourself dividends.
Right. Okay. And that's why I like real estate investing. Another reason I like real estate investing,
Passive income.
Is because you get that passive income. Exactly.
Exactly.
Excellent. Okay. So now you spoke about mutual funds, you spoke about ETFs. Let's talk about some other classes. Penny stocks. What are your thoughts about penny stocks?
All right. So here we go. This is US dollars. Any stock that's $5 or less is classified as a penny stock. And get this, 99.9% of penny stocks that hit that range never break out past it. The reason is institutions, large financial institutions, which move the markets, they lose confidence and they will look for other stocks. Now, if a stock jumps down to between $5 and $10, there's a 90% chance it'll never break out past that dollar amount. So I always recommend try to let institutions drive those share prices north of $10. That's US dollars. I know other people around the world, because we've got customers around the world that will say, well, $10 in our country is a fortune, depending on currency exchanges. But yeah, so wait for stocks to get above 10 and then invest. I know some people think like, okay, so I see a new hot stock that went public. It's at 50 cents. It could go to $50 in the next 2 years. The chances of that are like slim to none. Just because of that rule, institutions lose interest and they're not going to drive that price north. So again, wait for it to be greater than $10 and then get involved.
Got it. Okay. IPO stocks. What are your thoughts about IPO stocks?
Okay, here's one for you. So just because you can doesn't mean you should. What I mean by that is there's companies out there, especially a lot of companies like penny stocks, that they're weaker businesses and they've run out of ways to raise capital, such as venture capital, private equity, even getting loans from a bank. So the question is, how do you raise more capital? Well, your answer, you go public. And with that, you get a lot of these companies that go public, in many cases at a low share price. And when the first earnings report comes out, that's when the truth is revealed and the share price can fall off a cliff. And I did a video with my community the other day. We took like 5 IPO stocks and watched it went public, share price rocketed straight up, and within a month fell off a cliff and everybody loses money. What I recommend you do, after business goes public, wait for consecutive quarters and make sure each quarter that stock is increasing its profits. That would be that net income, and it's beating the earnings report every month. And examples like, let's say the expected earnings is like 5 cents. It comes in at 7 cents, right? You want to see that consistent for 4 quarters and then get in. Don't get in too early because many people lose money on IPOs.
Yeah, that's great advice. What about crypto?
All right. So we have crypto and Tykr, but you can't analyze crypto because it's not a business. It doesn't have income statement, cash flow statement, or balance sheet. However, we do bring people into the community and we let them know, if you're going to invest in crypto, invest in, number one, blue chip stocks, your big players like Bitcoin and Ethereum. And 2, invest 5% or less of your net worth. Don't go any more. So we bring a lot of these crypto traders into our community and let them know, like, this is what you can do, but if you really want to make consistent returns, go into value stocks.
Okay. All right. Well, that's great advice. And I wanted to go through those types of investments because I've been asked those questions and I'm nowhere near have the expertise that you do or any financial advisor. I'm focused on multifamily real estate and not really sure how to answer those, but I think that's great general advice. Let me ask you this. Can you do all the things that you mentioned to me? Can you do this without Tykr? You
can create the algorithm in Excel. I will tell you this. it would take me, and I was pretty fast, it would take me 10 minutes to analyze one stock. So at a half hour, I'd get 3 stocks. And in many cases, it'd be like I found 3 duds that are going to make me any money. That was my life prior to creating the software. So I knew 2019 to 2020, I'm like, I have to create a software so it does this automatically. So yes, you can do this without Tykr. It will be a very manual process, but you'll save a ton of time if you use the tool.
10 minutes without it, with it, just a few seconds.
Oh yeah, log in, you can pick anything, all the usual suspects like Tesla, Apple, Microsoft. You'll see immediately like, hey, is this a strong company or is this something I should run away from?
So do you have to come up with the names and the ideas of different types of investments, or does Tykr search them for you? Like, hey, look, these are the good, strong ones to consider investing in.
I'll kind of give you a little picture of the onboarding experience. So when you first sign up, it walks you through, asks you, what are your interests? And with that, it starts to pick a few stocks for you and adds them to your watch list. You kind of get the flow of how it works. Then you go to the stocks table and you can filter by anything you want, such as industries maybe you're interested in, or let's say market cap, what the share price would be, what the score is. You could literally, like I've done this, here's one for you. So there's like over 30,000 stocks in Tykr. I did a filter the other day to find out how many are perfect score of 100 on 100 score. And a perfect MOS is five stocks.
Wow.
It's like, it's super rigorous.
Yeah.
So you can start anywhere, and you'll see like it's pretty easy to use. And of course, I always say this, never take my word for it. Go see what our Trustpilot scores and reviews. Right. What do people say? It's like super intuitive, especially for beginners. You get the hang of it pretty quick.
Well, this really sounds like the magic bullet. Like, this will do all the work for you. You never sell for a loss. What are the downsides?
Well, it doesn't produce residual cash flow like real estate. So we tell people this. Stock investing is really good for accelerating your wealth, but it does not produce passive income. Even if you go into dividends, you do need to have a portfolio of like north of $1 million in some cases to pay yourself some decent dividends. So I tell people, if you really want passive income, the best complement is real estate. So that is the negative side of stocks. Is got to have this long-term vision, and you just got to keep watching your account grow, but you're not really not paying yourself yet until, of course, you hit retirement or financial independence. But it's a patient process. Like, gosh, I want to start paying myself. It's like, nope, stay disciplined, keep putting money in. But real estate is the better play if you do want the passive income.
Got it. Okay. And as you mentioned, there are going to be downturns. You're gonna miss the mark on some investments, and you're gonna have to wait till those recover, and it may take some time. And as you mentioned, patience is of utmost importance.
Yep, exactly.
Great. And you mentioned you spoke with multiple financial advisors. Do some of them use this tool?
They do, not only for themselves, but for their customers as well. There are advisors out there that whatever tool they're using to trade their clients' accounts, they can kind of trade multiple accounts at once. For example, let's say I want to buy 10 shares. I can buy 10 shares of all my customers at once of Apple. I'm throwing out a name there. They will do that. They will use the tool to find the strong stocks and then make those trades for the customers. And then, of course, for their own portfolio, they're using it. But their job, as I go back to, it's wealth protection. So being a fiduciary, protecting their clients' wealth. So most of them will probably say that if you go 50-50 split, it's probably going to be greater than 50% in the ETFs and index funds, probably less than 50% in individual stocks.
Right. Got it. Do you have data on how your clients at Tykr are doing in general? Do you have that information?
Not yet. We're working on that interface right now. To give you context on our play, there are a lot of people that join brokers out there like TD Ameritrade, Interactive Brokers, Robinhood, the list goes on. A lot of these people join and they add between $100 and $1,000 and they sit. They sit for 3 months, they sit for 6 months. And that's not making these brokers any money. In fact, one broker said they call them tire kickers. They just sit on the sidelines. They don't make us money because these brokers make money based on transactions. So I started having the conversations with the brokers, asking them, what if I could show you the average returns over a given time period, let's say a year or last 5 years. I can also show you how many stocks people are buying and selling, how large their account is. I can show you all that data to let you know how our platform is comparing or doing compared to your platform, your broker. Because our goal, as I phrased it to some of these brokers, I said, we want to get your people off the bench and in the game. And the response was, if you could show us data that your clients are making more trades with Tykr, we're going to want to do a partnership deal. So that's our big channel partner play to really accelerate the growth of Tykr. But yeah, we're working on the data interface as we speak. My assumption is we're beating the market, like our clients are in general, but we won't really know until we get there.
That's so interesting. Do you have other competitors out there?
Yeah, so Seeking Alpha is a popular competitor. These are all good platforms. Like Seeking Alpha is good. Simply Wall Street is good. I'd probably say those are two of the best. I will say they are a little more geared to the moderate to advanced investor. There are a lot of like charts and graphs, and there's a lot of data points. You might not know what you're looking at. So we have a lot of the same toys, but it's probably a little easier to understand for the beginner. So we do skew towards most of our people that come in, about 80%, they're completely new to the stock market. They want a laser focused, easy path on how do I start doing this on my own. Tykr is going to be a better fit. Seeking Alpha, I will say a benefit with them is they've got a lot of cool analyst ratings. Other people, analysts with different companies, they can add their own ratings, like write articles within the tool, which is pretty cool.
Okay. Yeah, that's very interesting. So it sounds like in summary, you've created an amazing algorithm that's very useful that you put out there that people can look at themselves. It seems to beat the market in general. You can certainly do these things on your own. You can analyze stocks on your own. You can use AI to help you pick stocks based on your criteria, but it just takes that extra time. Whereas with your software, it's less time. You also get alerts as to, when to buy and when to sell, which is huge. I mean, that's of utmost importance. So certainly something that I am going to look at. I looked at your webpage prior to this podcast, and I was really impressed, and even more so impressed after talking to you about it. So let me ask you this: what would be your one takeaway from this conversation? What would you advise people based on our conversation?
Just going back to my comment on confidence. Everybody wants confidence to do this on their own. There's a lot of customers have told me this, like if they can go to sleep at night knowing they're investing in strong companies and not putting their money into something that's going to lose them money, that peace of mind is worth its weight in gold. So confidence is the key word. They want to be able to do this on their own. And yeah, we tell people just, it's free trial with Tykr, give it a test drive like you would any kind of car, right? And test it out, see if it's for you. And then if you do stay, start, throwing between $100 and $1,000. Just start small.
Yeah, and it's not very expensive either. How much?
Yeah, it's $99 a year is our base plan, and then we have some other features that we're adding that'll go up a little bit from there. But yeah, we're just a low touch SaaS business.
That's excellent. How can people contact you and learn more about you and/or Tykr?
Yeah, best place is go to tykr.com, Tykr.com. Any questions, you can email support@tykr.com. And then I did mention my podcast, Payback Time. If anybody's into like real estate investing or building businesses or even venture capital, it's kind of a wide range of ways to build passive income. So check it out, Payback Time.
Excellent. And we just spoke, Viking's Vikram Raya is also on your podcast as well.
Yes.
Yeah. Excellent. Well, Sean, this was amazing. Really appreciate all your insights and information. And certainly I would advise people to give it a shot. As we discussed, diversification is of utmost importance. And you want to invest in real estate, obviously, but also various investment types to build your overall wealth. And this is, stock market is an obvious, easy solution for that. Thank you. And hope to have you soon again on the show.
Yeah. Thanks for the invite, Robbie.
Yeah, absolutely.
If you like this podcast, please hit subscribe or a thumbs up, and we'll see you next time.